strip stocks and shares back for us, and what actually are they?
Okay, let's go right back to basics. When you buy a share in a company, let's say they have 100 shares for a whole company, you'll own 1% of the company. So you're effectively owning an equity or a stock or a share is basically part ownership of a company. That entitles you to certain things. It gives you the right to have some of their retained profits if the company was ever wound up. That's the profits they built over the years and years. And if they pay a dividend, and not all companies do that, you will get a share of their dividends as well, which they pay out. It's a bit like interest on a building society account or whatever. And companies, mainly in the UK, tend to pay dividends much more so than the US. But nevertheless, it's something that you'll return in both ways. Either the profits grow and or the dividends grow with this as well, and you get the returns from both.
So just to underline that, a dividend is a share of the company's profits that you're paid out, whether it's 6 months or every 12 months, and it's in the form of a percentage, just like an interest rate is.
Yes, well, it would be a sort of pence per share if you're in the UK. So let's say they've got a £1 share price, they want to pay a 5 pence dividend per share. So that's equivalent to 5% over the year. And you'd get that. And you can do with that 5 pence, whatever you want to do with it. You can reinvest it back in the company. And there are some schemes that let you do that tax efficiently. Or you can take it down the pub and spend it if you want. It's a great thing to do, but it gives you the responsibility of what to do with that cash.